Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, March 22nd, 2024. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame. You will notice right now a narrow range heading into the RTH Open, just 35% of ADR, 19.5 points of range right now as the market awaits Fed Chair Powell at 8 a.m. Central, 9 a.m. Eastern Time. Fed Chair Powell to speak. It'll be the first time Fed Chair Powell is speaking since the FOMC statement and rate decision were released and the press conference that followed. The market rallied tremendously into the close that day. But over the last session plus here, we have gone quietly sideways in anticipation of Fed Chair Powell speaking today. So that could provide some volatility here early in the session. Now, keep in mind this market continues to remain quite bullish overall. The uptrend remains intact, and that has been the case throughout the year thus far and throughout the quarter. We may be at a short-term cycle high, which means we could see a little bit of a pullback, but the expectation is for the uptrend to remain intact until the structure of this trend is broken. So until we see evidence of that, this market continues to see buy the dip opportunities at every turn. And again, while we may see a pullback today, perhaps even into a retest of the FOMC key level below, the expectation is even on a 1-day or 2-day pullback, we see a continuation higher until proven otherwise. Keep an eye on the 52.90 level. A failure there, and you start to rotate this thing into the previous Wednesday range with a shot at retesting the FOMC key level below at 52.36. Keep in mind that today on Fed Chair Powell, we could see volatility that gives us somewhere in the range of 50 to 60 points of range for the ES. Now, taking a look here at the NQ, the NQ seeing a little bit more weakness here. This thing back below the previous session's lows, back below the Wednesday previous session high there, and is starting to work down just a little bit here. This one has also seen new highs. That's been kind of the MO here lately, is a couple of steps higher and a couple of steps back. You know, we see a high here, we pull back, a little bit higher high, pull back, a little bit higher high, pull back, higher high, pull back, higher high, pull back. And we just put in another higher high here recently, and we could be looking at another pullback phase that takes us back again into a retest of the FOMC key level below 18,272.5. Even if we do see that, again, the expectation is this thing turns around and continues to quietly drill higher until proven otherwise, until we see some sort of significant rejection on the high, or we see some major takeout of a prior pivot low. This market continues to remain quite bullish overall. Short term, keeping an eye here on the 18.5 level, a failure through 18.5, and you start to work your way back into the Wednesday range below. Now, taking a look here at crude oil. Crude oil here had a 2-day pullback. We mentioned before on this breakout through 80 that price could pull back as deep as 80 or even a little bit below 80 here and still see a buying opportunity for an extension ahead. We have seen a 2-day pullback play out. Right now, a modest little bounce here today developing inside day so far, and really it's just kind of hugged the flat line of the FOMC key level of 80.95 from Wednesday afternoon. It really hasn't gotten too far away from that level. Inside day has developed right now off that level, but still an upward bias. This market has been super reluctant to really push higher, but it has. It has gradually moved higher, higher highs, higher lows, but still the 80 level is still a very important level to watch, and we could still see a dip into that zone for a big test. Even if the market drops even deeper, this market continues to remain uptrending overall. So again, ideally bulls can keep 80 bid. We can take this thing higher toward 85, maybe even higher. That's the ultimate goal right now. Inside day as this market also awaits Fed Chair Powell. Now, taking a look here at gold futures. Gold had a tremendous rejection in the previous session. It was really after hours on Wednesday. The after hours spiked to the highs of 22.25, were quickly rejected. Price dropped back down below the 22.15s, and then 22.15 became resistance. Became resistance throughout the overnight and into the next RTH trading session, and eventually we saw a massive pullback that took this thing back toward about 21.69s. Overall, this left behind a massive high range day, a 200+% of ADR session, and that is likely a day one rejection. You have a higher high rejection here, which gives us a bearish divergence as well. That would tend to send prices to the opposite pivot low. The opposite pivot low right here is 21.50, and a break at 21.50 would open up a drop back toward the 2100 level and perhaps even lower, back toward 2050, to wipe out the entire gains of the month. So this is going to be something to continue to keep an eye on. At the moment, we could continue to see a little build out here, seeing a little bit of strength off the lows at the moment, but as long as bears continue to keep 2200 offered, this market could be working lower after this day one rejection. Taking a look here at the YM. The YM right now is about break even at the moment on the day here, mostly compressed. I mean, this is a super narrow 116 point range, which is 29% of average, so just about as narrow as it gets. And again, ahead of Fed Chair Powell speaking here in a little while. This market has outpaced the ES, it's outpaced the NQ. It's had a massive 3-day move to the upside. You don't tend to see a 4th-day stack on top of itself like this. Instead, we could be looking at a little bit more of a pullback here, a failure through the previous session's midpoint, and you're opening up a little bit lower. Now, this is the first time we've traded through 40,000 as well. Can this market stay above 40,000, or does this narrow range up here begin to lead to a pushback below that level? That's going to be something to keep an eye on. Again, super tight range here today, and a failure at the previous session's midpoint at 41.32 could open up a return back to 40K and perhaps even lead to a retest of the FOMC key level below over the next several days. So we've seen it go heavily bid here. If it can't go up anymore, it tends to snap back to that level. So 39,526 could be in view here at some point down the road. Again, this market remains quite bullish and outpacing at the moment after being mostly stagnant for many weeks. So this is the first real dose of strength we've seen in quite a while, and any pullback could still be a buying opportunity. Pullback into 39.5 could still lead to another round of strength up ahead. All eyes on Fed Chair Powell here at 8 a.m. Central. We'll see how this market responds heading into the weekend. Everyone have a fantastic Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room.